What's up, guys? Welcome. Just got out of the gym and I watched Jeremy's video from Financial Education. It was this stock will go to $1,000. I'm not selling a single share. So I like to watch his videos and some other people's videos, and I thought I would give my input on how to do it better versus just like buying shares, because a lot of people try and buy stocks and they don't do very well. I'm going to give you kind of a safer, more profitable way of attempting to trade like Jeremy, but in a much better way. So right now we are looking at Meta. He was talking about Facebook and Honest and I think Fubu or something. I only liked the first two I said, was the Honest and the Facebook. So you could buy a share, $573. Here, I'll put me over there. Let's see, kind of a recency bias, hit a low of 550 and a high of 600. So for the same price as one share, let's flip over to Tasty. And this is kind of what I'm looking at as far as a trade. Here we go, scroll. So, and this is based upon if you have like a $10,000 account. You want somewhere between like a 3 to 8% position size. There's other things we could do if you have a smaller account, but for the sake of a $10,000 account, this is going to take up. You can see where it says max profit. I'm covering it right now, but max profit, max loss. $417, max loss $583. So it's selling for about $573 a share. Um, so your buying power, the amount of money it's going to take to put on this trade, is similar to one share. Now the difference is if you buy a share of Meta, it's going to have to go up $417 for you to make $417. The trade I'm showing you is it only needs to stay still or go up. And it could even go down a bit. So it looks like our strike here is $540. So if you're new to options, I'm trying to just give you a really simple explanation, not trying to explain options too much, but the red, I'm going to cover it with my face. This one, and then the green's up there. The red is where you don't want it to drop below. So you're drawing a line in the sand. You're saying, as long as this stock stays above 540, I will make $417. And you can see down here, review and send. I would just click down here, review and send. In order to put this order through, Meta is a very liquid stock. It's the 262 days to expiration spread, and you're selling a $540 put, which is insurance, and you're buying the insurance, the $530 put. And what that does is it gives you a net credit of $417, and it takes $583 of buying power. So after 262 days, if the price is above $540, well, you just made $417. It's very unlikely that it's going 583 plus 400 is 983. He said it'll hit $1,000. It doesn't have to hit $1,000 to make your $417. It just has to stay above $540. Now, that sounds too good to be true. But you're in this trade, you're being a market maker. So you have an unfair advantage versus people just buying stocks. The downside is you're putting up $583 that could be lost, because if it drops below 530, you would lose every bit of that $583. Your break even is going to be 540 minus $4.17. So that would be 535 83. Yes. So if it drops below that, that is when you will start to lose $1 for every penny, because options are times 100. So anyways, this trade is much better because it just needs to stay above 540. And if you have a $10,000 account, this is about literally it's about 5.83% position size, which is a little high. We want to kind of stay between a 3 and 8% position size when we're managing our account like this. So this is my bullish trade of the day, to trade like Jeremy, but it's, in my opinion, it's much better to spend $583, and all it has to do is stay above 540. The stock could go down and you still make as if it went to $1,000, which is pretty insane. A lot of people don't know how to do these spreads. So you can see it all here. You can see the expiration you need to do. You can see the strikes, the green you need to buy, the 530, the 540 you need to sell to open, and it gives you that net credit of $417. So that's for that. Now I'm going to look at Honest, and we will hop right back on it. All right, now we are looking at Honest. This one, I think he's bullish on this. The PE was like, there's no PE. That's one thing I didn't mention about Meta, was the PE is actually insane, even though Facebook's up quite a bit. I'm not a big fan of unprofitable companies, but Jeremy seems to know stuff, and what he says seems to go up. I remember trading this based off Jeremy a while back when it was like $2 or something. Let's look. Yeah, $2. And look at that. It's all the way up to $9. That's very impressive. That's almost like a 4x or 5x return. So if we wanted to trade this, and he seems to think it's going up, let's see a better way than just buying the stock. So here I'm going to show you two different ways, because if you have a smaller account, what I was talking about earlier wouldn't have worked, because a $583 position, it might be too large for you. I have a better way for this one, but we're going to start out with a $603 position, and this is going to pay you $147. Now you're like, well, why isn't this one double? Because this trade, you're selling a naked put, and it's at $7.50 for 171 days, and your credit is $147. Now, the reason the return isn't almost 100% like it was on the last one is because if you're wrong and it drops below your strike, this time we only have one option, then you will acquire shares. That $7.50 put is an insurance policy you're selling to somebody. And what you're telling them is, if it drops below $7.50, I will buy those shares for you at $7.50. And it's trading right now at $8.32. So if it goes up, obviously you keep your $147. It says $147, but everything's times 100, so it's actually $147. That's why you see max profit, I'm covering it with my face, is 147, and max loss is 603. That would be if the stock goes all the way to zero and gets delisted. So if you believe in Honest, you don't think that's going to happen, then this is a safer trade, and it's also very profitable. It's basically 150. It's basically a 25% return in less than a year. 170 plus 170 is 3-4. Yeah, about 6 months or so. It says May of 2025. A 50 or 25% return is a pretty decent return, and if it doesn't work out for you, you get put shares, and you can turn around and sell calls on it. Now, if you don't have $603 to put on this trade, what we can do is we can go back here and turn it into a spread. That's the vertical. We're going to short the put. We're going to move the strikes up a bit. Boom, boom, boom. We're going to extend the time. I think that's where I want it, 7:15, 5, yeah. We're going to take it back out to 171 days because it gives us more money. Now you can see, instead of making $147, we're only making $97. That's because if it goes to zero, we're defining our risk. Now you see your max loss is only $153. And I'm trying to think, I'm going to pause for a second. Okay, there we go. I was doing the math in my head there. So this trade, your max loss is $153, and this would be about a 3% position on a $5,000 account. Now, if you're first starting out and you have a few $100s, you can put these on. It's not recommended. I mean, you usually do like 3 to 8%. You want to kind of stay in that range. You might want to start out at 3% and kind of build up to an 8% position, and then just be diversified, and then only use about half of your capital. That's kind of like how a hedge fund, or just like a very smart financially person will kind of manage their account. But if you're starting out, high risk, high reward, you put that $300 paycheck in and try again next week or whatever, because you're gonna have to somehow build up to a few $1,000s or $5,000. But this, you can throw $153 at it and look at it as like a lotto ticket. But I mean, your chances of taking it is much higher than if you buy the stock You know, this is like, what is like an $8 stock, $8.32. If you buy $153 worth, you know, your chances of, let's see, 100, over 50% return is pretty unlikely. Um, so, anyways, it's a better way to do it using options. And if you imagine insurance policies, they go bad usually and don't get used. So, telling somebody, hey, you know what, it's going to stay above 750 for the next 6 months, you have a much better chance than it having to go up. So anyways, I believe that's a better way. It's higher probability than just using the stock. If I had to trade like Jeremy, if those were my only options to trade in the market for Honest, Meta, and the other one he mentioned, this is the way I would do it. I would kind of sell these puts, and then a lot of times stock can even go down and I still make money. So anyways, just trying to give y'all a bigger armor, bigger weapons to win in this thing called the stock market. Anyways, I hope y'all enjoyed the video. Drop a like, subscribe. Thanks for everything, and I will see you guys next time.